Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Friday. I'm Juliette Sarli along with
Nadine Blaney. Hello, good to see you all again. Friday afternoon, never too late. I like slipping in when it's a really positive day out there, Juliette.
Yeah, you brought the green today, Nadine. It's been a very volatile week, but a really good day today. Up by about 1%, I think, as we turn into the match out. Yeah, the SIBO there up by 1%. The ASX 200 also seeing a gain of about 1%, 71 points. So importantly, back above that 7,400 point level.
Yeah, and actually it's positive right around the region. So we can trace the beginnings of this, of course, back to Wall Street overnight. Pretty positive session, particularly for the tech sector. Now, whether or not that was entirely justified or what exactly we are putting that down to, well, we'll chat with our guest in just a moment, Kyle Rudda from Capital.com. But yeah, around the region, pretty positive. I mean, you can excuse China from that, but even if you look at some of the key commodity prices, so iron ore, for example, iron ore is looking pretty positive at this stage of this Asian session.
Yeah, indeed. And looking at the themes that we've been following, you mentioned that the lead-in started from Wall Street. We came in this morning talking about that big rally in Apple up over 3%. It had a broker upgrade. You had those good numbers from TSMC really just suggesting a big recovery coming through for some of these chip makers. And the other really positive factor, of course, Apple ending Samsung's 12-year run as the world's top smartphone seller.
Oh, well, I'm surprised that Samsung was still on top. I don't know why.
I think in Asia you'll find a lot
there's
of people.
a lot of Android.
South Korea have Samsung, but very, very positive lead into our tech players as well. Xero up by about 4.4%. I remember when I moved to Asia and I had an iPhone, I was kind of on my own.
Were you?
People love a Huawei or a Samsung. Yeah.
Interesting. Yeah, you get sort of blinkers on, and yes, apologies to all of you out there who wish that we had an Android app on the roadmap. I've said that for a few years now. I do realize. Okay, so sector-wise, pretty positive. 10 out of the 11 sectors are positive. I suppose one thing that we're keeping our eye on, though, is the Australian dollar, so coming under renewed pressure. I can't help but think forward to inflation data that we get, quarterly inflation data next week. That's going to be really important. And of course, the following week, once everybody's finally back from their long vacations, we will hear from the RBA for the first time in 2024.
Yes. So January 31, we get that inflation quarterly print, and then February 6 is when they're meeting, something like that, the first Tuesday. So, of course, it really is going to be all about the pieces that have flowed through. But it has been interesting to note that some of these food prices are coming down. And I was talking to Ilya Spivak today from Tasty Live, and he made a really interesting point on the trade that food inflation does lag core by about 7 months. So when you start to see these lower food prices, then that's an interesting point for the potential money policy cycle. Of course, he was talking about the Fed, but it pays heed to the RBA as well.
Look, don't want to over-egg it, but I've been listening and reading a lot about the Red Sea and a lot of the disruptions there, and the Houthis in Yemen, and the war that's not been declared against them by the US. Look, the shipping is a very big concern and a very big player when it comes to costs. And of course, we've got our own dispute in terms of industrial relations here happening in Australia. So I think that, I think the inflation story is not going away. How these nuances will come through will be really endlessly fascinating and important through 2024. And I suppose that's a nod as well to, that conflict between Israel and Hamas now going on for 4 months. Can you believe it?
Yeah, it's awful.
Yeah.
All right, let's have a look at some of the sectors. We mentioned tech was a front runner today. Xero, WiseTech, all looking really good. WiseTech, they're up by almost 3%. Xero up by 4.4%.
Okay, let's take a look at energy, because again, if we're looking for positivity, mostly positive here. And Beach Energy up by 1.8%. So that brings us to consumer discretionary stocks.
And Aristocrat had a solid session up 3.5%.
Really well.
Lottery Corporation, I was trying to work out, is this tied to the $10 million, or how was it, $100 million last night that went off? I'm not actually sure that was the same one or whether it's Tabcorp. But anyway, a lot of interest in gambling, up 6%. Tabcorp up by 0.7%. Breville also high, but Kogan was lower today.
Yeah, that's really punchy, isn't it? We've got perhaps that being one of the sectors to watch in 2024. Okay, so let's get to across some of the corporate news. And, there we go. we've got Whitehaven. Yeah, Whitehaven was the second best performer, I think it was, by the end of the session. So it's a production guidance season right now, you could say, from these miner. Still talking about some challenges, at the Narrabri mine and a major train derailment in New South Wales, but production was down by about 5%. However, total sales jumped. And so you get that really positive share price reaction there.
Yeah, Synlait Milk coming under a little bit of pressure. It did increase its 2023-2024 season milk price forecast, and that's due to these higher dairy prices that we're seeing.
Yeah, Michael Hill. So this is one I saw this morning. Not a lot of volume going through on SIBO there, but flagging challenging conditions. I think that it does expect to see first half earnings to come in between $30 and $33 million. But again, it's really interesting that margin pressures are under higher because of what? The higher gold price, of course, but mostly putting it down to the challenging retail landscape.
Well, people aren't going to buy jewelry if they can't afford their power bills, are they? Mesoblast, they're the US FDA approving a designated treatment for a rare pediatric disease. Mesoblast up by 13% there.
Yeah, but I dare say it's one of those most volatile companies on this ASX list. So another one that we've been watching now for a couple of days, EML, finally walking away from the Irish business, some might say finally. Share price is putting on more ground today. So that's that PFS card services that really has caused it a lot of problems. So looking like it's cutting the cord, moving on, and investors are celebrating that move.
Indeed. Actually, I spoke to Harry Watt yesterday from Shaw and Partners. He said, watch it all get to $1, and it did. So there you go.
You need to be watching us to get these tips ahead of time.
Kyle Rodder always watches us, joining from capital.com. Hello, Kyle. Happy Friday. So much to talk about, but I was very curious in terms of, because Nadine mentioned what we've been seeing in Asia, what you've been witnessing with some of the big moves in the China markets.
Yeah, I mean, yesterday there was obviously a lot of speculation that maybe the national team finally stepped in and started to sort of support asset prices a little bit. The follow through has been, I guess, modest today, but clearly their job isn't, or their objective isn't to try and push markets higher, but stabilize them and make sure volatility doesn't manifest in further, financial stability risks. And of course, everyone's concerned about anything that could stoke, problems in their highly leveraged parts of their economy. So. Overall, though, it was a relatively inexplicable rally on Wall Street last night. I had a very difficult time trying to describe it because really it was a bit of a narrative shift, or at least it deviated a little bit from the prevailing narrative about everything goes up when those March rates futures imply a higher chance of a cut. But nevertheless, we had sort of interest rate sensitive markets performing well today. It has to be said that the ASX does look like it's going to finish about 1% lower for the week, but obviously Wall Street looks very robust, and the Nasdaq is at a record high again. And the question becomes whether sort of the party rolls on despite the very, very significant uncertainties about the Fed's ability or even desire to lower interest rates in the next couple of months. So I mean, overall, again, Asia has been a little bit of a bounce, probably supported by some kind interventions from Chinese policymakers, but I don't think any of today's price action necessarily signals a resolution to some of those unanswered questions that markets are currently grappling with.
No, but Japan had a positive day as well. So some positivity, I suppose, coming through in the inflation read there. What does it do? Does it just take pressure off the Bank of Japan?
Yeah, I mean, I kind of think that the market in Japan is being driven by two things. One, the domestic factors are more these sort of corporate governance changes, which is not taking a very Japanese name and shame approach to try and force companies to be a little less lazy in terms of their balance sheets and force them to be much more sort of focused on growth and boosting multiples. And then also all those other sort of tweaks that go a little bit outside of what I would typically look at, but to try and sort of increase sort of retail investment into the space and more or less sort of drive flows and increase multiples in Japanese assets, which has proven very successful. I mean, that's really the catalyst as to why we've seen the market run as high as we have over the last few weeks. The macro side for Japan, though, is fascinating because for me it's the quintessential soft landing trade, which it really is relying on a steady depreciation or relatively low, if nothing else, Japanese yen, which we have seen recently with this resurgent US dollar, but simultaneously a sort of a drop in or a fairly contained bond market volatility that doesn't see yields rise too much, even if some rate cuts come out of the market in the United States. And we have seen that so far. It seems like a very unlikely mix to occur. In fact, I sort of feel rather skeptical about speculate how long it can last. But effectively, that kind of very fine balance has gone the right way for Japanese equities, and it's obviously they've been off to the races. So again, we saw 36,000. Technically speaking, looks a little bit oversold, but that's really where all the strength is. And I think, I'm sure it's a stat that was rattled off earlier in the week. It's Friday afternoon, so we can be a little bit retrospective, I suppose. But the Japanese market, sort of exceeded that of the value of China's this week as well. So it's the place to be. It's very, very bullish. I don't know how long that can last. Maybe it's a contrarian indicator, but certainly the area of strength very much is in Asia is Japan right now.
Kyle, should we be pointing to, as Nadine alluded to, this potential resurgence in inflation just when we were thinking we're getting a handle on it when we look at what's happening in the Red Sea? You mentioned some of the conflict. I also noted coffee prices have been rising, instant coffee, because Vietnam, the top producer, is being caught up by a lot of these shipping snarls as well. I mean, this is something we really do need to be watching a lot closely.
Well, that's a tragedy if that's the case. I don't know. I've moved back to Melbourne.
You don't drink instant coffee, though.
In Melbourne.
We've got a few people in the office that do. But I mean, at the moment, you haven't really seen in terms of market implied measures of inflation, nor even commodity prices, much of a reaction to what's going on, at least in the Middle East, which says one of two things, at least when it comes to oil prices: either the market's inappropriately discounting the risk, or the demand side issues that are emerging for energy markets. China's one part of the story as to why everyone's a little bit pessimistic about global growth, but just more broadly speaking, the Saudis cut prices a couple of weeks ago. There's this sense that demand maybe this year will be fairly weak for energy, and therefore oil prices have remained relatively contained. If you look at the West Texas Intermediate contract, which I only quote just because that's the one that we price and is most traded by our clients, still remains in the low 70s, which doesn't suggest a supply shock is on its way, and sort of this kind of broad-based inflationary pressures could come through the market from that perspective. Again, it depends on one or two things. It's either the market's not discounting the risk appropriately, or the demand side is far more significant. I will say the contango in the oil market has come out now, so at least some of that oversupply that was being baked in at the end of last year and was responsible for weighing on prices a little bit throughout the last 3 or 4 months has reversed. So we're seeing a healthy backwardation now in the futures curve. But for the time being, inflation risk from a supply shock doesn't seem to be particularly elevated, looking at market prices, notwithstanding the fact things could escalate and the markets could be wrong. So we'll see how we go.
Yeah, we will have to see how we go. Look, you alluded to it earlier, week to date down by 1%, but today up by 1%. Technically, when you look at the Australian market, back above that 7,400 level, 7,421 right now. How are we looking?
Well, I mean, I think it was a pretty noteworthy rejection of all-time highs a couple of weeks ago, which suggests that we're still in a range-bound market in the bigger picture. And, I'm a little bit skeptical as to, I guess, the performance of the ASX 200 this year. I mean, obviously, we'll follow whatever happens in Wall Street and broader sentiment in global markets. But, I mean, I think we're starting to see a very, very rational pullback in iron ore prices because the China story is not very good. In fact, it's rather bleak. So our miners are sort of poised for a continued pullback, and then the domestic economy is fairly lukewarm. So, I mean, it doesn't look like a fantastic environment necessarily for the ASX 300. I mean, the silver lining is that we really have range traded for a while. So if you can sort of play those ranges appropriately, then maybe that's where your opportunities are. But again, from a technical standpoint, it's really lukewarm at the moment. Sentiment's fairly neutral. We'll really quite simply need to see the market trying to break out to new highs, that kind of pretty much quadruple top in the market over the last sort of 3 or 4 years to give us any kind of indicator that sentiment is turning and the technicals are turning more constructive.
All right, Kyle, always a pleasure. Have a great weekend. Make sure you get some non-instant coffee in Melbourne. They're the capital of coffee, of course. All right, let's have a quick look at some of the leaders and laggards of the session. We mentioned Lottery Corp up by almost 6%. Xero, they're up by 4.4% on that tech rally, along with Weebit Nano, Nanosonics as well. Yeah,
they really benefit when there's that overall rally. And on the flip side, though, let's take a look at some of the laggards. Boss Energy is there. We've got Star Entertainment there, Paladin, Emerald Resources, Liontown. You can sense a bit of a theme there in the lithium space. So yeah, that's a bit of a snapshot there. Do we have the small to mid caps here? I don't know if I'm going to shine myself in glory here today.
I think you should. Well, can I just show you what I know, because I'm never very good at this sector, but I know what was happening with Mesoblast, which we did talk about, and as you mentioned, very volatile stock, up 13%, and EML Payments exiting its Irish business up by 8%. That's my knowledge.
I'm going to just like show off a little bit
Good.
here.
Take it away.
And take it away with Playside Studio, because this is one that's actually been flagged by a number of our guests as being pretty interesting. Up 9%. There's no news associated with that. Tamboran Resources will actually be delisting. It's one of those with the Beetaloo Basin ambitions that just said that like being an ASX listed company has not been very favorable to it. Flipping the page and some of these laggards. In the small to mid-cap space, it's the usual. It's sort of a motley mix of a lot of those energy and resources names. Melbourne, the home, the mecca of tennis right now, not just coffee. Every second person I know, Juliet, is heading to Melbourne.
Who's going there next Friday?
Who?
Me.
Oh,
For
lucky
Australia
you.
Day, I'm going to the tennis. Yeah, I can't wait.
We've got a 4-day week coming up.
Yes, we do. Well,
Awesome.
that's my general life, but
Anyway, she's just rubbing it in, isn't she, right now? Look, we all have a weekend around the corner, but before we get there, let's get across one of the stock of the days. Meriwether Capital's Luke Winchester, Claude Walker from A Rich Life. We're here today.
Fantastic that Mesoblast has this designation, hopefully gets the rapid approval, and you know, the children around the world who suffer from the heart condition are able to it's able to assist them in some way. But when you have a look at that from a business point of view, and that's what we're here today for, to talk about this as a business and as a stock, the business still burns an insane amount of cash, and as I said, for the greater purpose and the greater good of society. But as a stock, I'm happy to sit on the sidelines and let other people fund that.
They had a trial conducted in 19 children, a single intramyocardial administration of Revascor at the time of stage surgery resulted in the desired outcome of significantly larger increases in left ventricular end systolic and end diastolic volumes over 12 months compared to the controls as measured by 3D endocardiography. Now, I don't think many of the people rushing out to buy shares in Mesoblast today, pushing it up 30 cents, really have any idea of what this means for the value of the company, or if they're like me, even really what it means.
All right, let's have a look at what we are going to see in the overnight session. Monthly business. I think this might be.
This is
looking
a week
at-
ahead, I think, yeah.
So we'll have the monthly business turnover indicator for November, the NAB business survey, flash purchasing managing indexes, flash PMIs, I should say, and a lot of production updates too, Nadine.
Yeah, so that is sort of the thick of it, because guess what's around the corner?
Reporting season.
Reporting season. So enjoy this while we get our muscles all sort of attuned to reading these reports over. But Fortescue will be really interesting, as will Woodside. I mean, they're all interesting, but to get a read from some of those bigger companies, and of course we always see what's been going out to China. I think I was wrong. I, for some reason, had it in my head that we get inflation next week, so it's the week after.
January 31. Yeah. So I was getting a bit confused ahead of the date. So Friday's the 26th, it'll be the following week, yeah. And let's have a look as well in terms of what we get from the global. Well, so we mentioned the BOJ policy decision very much in focus. Also, your Bank of Canada.
Well, former Bank of Canada, my former bank, but yeah, the Bank of Canada will be an interesting one because, of course, they've sort of paused. But be interesting to see what they say about inflation, because they have made it clear that they weren't reticent to hike again if they had to, but yet again, they've hiked more and more significantly, or to a higher rate, I should say, than we have here in Australia. So yeah, looking for the commentary there. And then we had warnings from the ECB last night that, again, and they don't think that the inflation genie is necessarily put back in the bottle. So I think that's what we're looking for now, is the nuance and the nuanced language around inflation. And I suppose, to everyone's point, sort of, these new inflationary pressures brought on by supply chain issues that could impact the outlook going forward.
Indeed, and China loan prime rates obviously a key one, as well as we watch for further cracks and potential stimulus coming through from that economy and the PBOC. All right, let's have a quick look at the market on the final day of trade, up 1%. As Kyle mentioned, though, I think we're down about 1% on the week.
Yeah. Yep. Looking ahead to US futures, a little bit of positivity there. So don't forget, we still do have a session to go in New York, and of course the European Open is not too far away as well. But we're knocking on the door of a weekend.
We are indeed. So we will enjoy our weekend. We hope you enjoy yours, and we'll be back bright and early on Monday with all the run-up from the weekend action and what to expect on our market.
Have a good one.